Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the Forex market wrap, going to highlight what happened in the news this week and some charts of interest from the week ahead analysis. So bit of a turbulent week again, very much market remaining in a sort of range bound situation where we didn't really get any clear movements in the markets. Price stayed within key levels, and this could be positioning for something bigger to come. So we've got to be a little bit aware that when we often see a consolidation in the market, we are preparing for something a little bit bigger. So in the news this week, there were some interesting data points. We did have Federal Chairman Jerome Powell testifying this week. It didn't really go particularly well for him before the Senate, so it was an interesting watch. The Federal Reserve Chairman actually said that there's not a recession risk, which other pointers are pointing that way. We had US PMI data out yesterday, which also showed a slowdown, so that typically could be a recessionary risk. So it's interesting to see that his comments. But from the data that was released, we had some CPI data, some more inflationary data out of the UK and Canada, which showed further growth. So CPI data out of Canada actually increased above forecast to 1.4%. So we saw the Canadian dollar gain some further strength, and we outlined that in a dollar CAD video this week. We talked about the potential downside to that market because there's potential for CPI data to move higher for CAD. We also had some PMI data out of Europe, and also came in a little bit lower, but we also had some revisions from previous. So not necessarily massive data sets. We did have some RBA governor speaking as well, and things like that, but I think then the bigger stuff's to come just yet in the market. So going on to what we talked about in the week ahead analysis video, we talked about the potential for the market to remain pretty much in a range. We did talk about the risk in the market at the moment has somewhat slowed, which could produce a little bit more dollar buying. The dollar actually had a really underperforming week, but also again was very much range bound, and that's reflected here by the euro. Price climbed above the value area high of the week prior, and we've pretty much been moving sideways between that level and the major high around about the 1060 where sellers came in recently. And every time prices come up into the highs, we've sold off so far, and we're heading back there again, so we could potentially see another move back down towards the value area high of the week prior. So it's going to be an interesting setup for next week, as it looks like we'll probably have an evenly distributed week. Moving on to pound then, so pound was also of interest for us. I did not really expect pound to remain above the last week's point of control, but last week's point of control would obviously be an area of support, and was acted as support on a couple of occasions this week. Was looking to see if price would trade back towards the 123.50s, 124s. We had a lot of selling pressure in here recently, but again, market remained very much within just a couple of levels and didn't really move outside of that this week. Kiwi, very, very similar as well. We were talking about the potential for price to sort of be around this point of control, and if risk continued to fall, we could have seen a breakout towards the lows. That wasn't the case in the end. Price did rally up, hit this area where sellers came into the market, and we did see some more selling pressure. Price is now back at an area where that selling pressure came in as well, so we could see another move towards this point of control. But again, if we kind of highlight the low and the high, pretty even distributed week, so a lot of range bound markets this week, which could lead to some interesting breakouts next week. S&P 500, one thing we did talk about with the S&P is that it could slightly recover. We did have this gap in the market, and we did talk about the fact that if price was to climb above this point of control area, let me just highlight that a little bit better, but if price would climb above this point of control area, then we would more than likely see a move towards that gap, and that's what we've got now. Whether we reject that is still yet to be seen. We could still climb higher if we trade above this gap. we could see a move back to 4100. But S&P downside is definitely something that you should be aware of. You know, this may just be a short-term bounce before we see another big move in the market. So I hope you enjoyed the content this week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.